regarding e-gold. Firstly, in order to invest in a stock market, you should have the demat account. Okay. Through the demat account, you can do the hedge funds. You can just invest the money in different sectors. Okay. Demat is one of the account where you will be having the details regarding where you have invested the money. Okay. This is only one account you should have, the same like a PAN card. For people, they should have only one PAN card. The same way it is a demat account. From demat account, whatever the invested money if you're having, like if think it is 1 lakh rupee, you wanted to invest the money in terms of stock or in real estate or something, through that demat account, you can invest the money through the hedge fund. Okay, understood? It is one of easy method of investing the money, that is demat account, through the demat account. You will get the idea how much is the loss for me, how much is the profit in this sector. Okay, if the real estate, whatever the invested money in the real estate, if it is less or if it is into the loss, then you will be just getting to know how much it is into the loss and how to compensate that in different sector. Okay, that is what the demat account will be used. And e-gold means through the electronic, there are different types of apps. Okay, from the government itself to the electronic means you can just utilize this e-gold investment. Okay, now one is a national spot exchange. There you should just open one account. In that account you can invest in a gold, that too will be in electronic form, the same like SGB, that is sovereign gold bond. How it is a paperless, okay, sorry, how it is a kind of a bond. Okay, that is the same way here we are using the electronic gold. As we have discussed all these questions yesterday, okay, let us move to the part 2 of the securities. Then, have you gone through this PDF? Yesterday I have sent. What? Okay, you have written the notes research. Okay. Have you gone through the notes yesterday? Okay, I have sent you the PDFs also. Okay. Now let us see which are the largest stock market in the world. Okay. The largest stock market in the world are, the first one is very important, New York Stock Exchange. How in India we are having BSE, NSE, in the same way in the world the largest one is New York Stock Exchange. Its worth is around about 28 trillion USD. Okay. Next comes the Nasdaq, that is also in USA. Okay. Next, Shanghai Stock Exchange, where it is in China. Next, Hong Kong Stock Exchange. After that, our Indian stock exchanges comes here. Okay, they have given Tokyo Stock Exchange, but see here, by combining BSE and NSE, we are going to stand in top 5 globally. If we combine BSE and NSE, we are ranking 5th position in the world. Understood? What is our market cap? It is around about 5 trillion US dollars. Okay. The 5th largest stock exchange in the world is BSE. If there is an option, if there is an MCQ in your tier 1, which is the largest stock exchange in India? BSE. Which is the largest stock exchange in Asia? BSE. Which is the 5th largest stock exchange in the world? That is BSE. If they have given combined, you just choose that option, or if it is only BSE, also choose that option. Okay. These are the important stock exchanges in the world. You should know which is the largest one and in which position India stands. Don't write the amount. Okay, that is not important for your exam. Only the thing is which are the top 5, that is important. Top 5. New York, Nasdaq, Shanghai, Hong Kong, and BSE, NSE. Also, we are ranking in top 4 and 5 also. See, compare here. 5 trillion, 5 trillion, and also this one. Few years back, BSE was into the 5th position. Now we are combining both together and we are into the 5th position now. Initially, individually, the BSE was the top 5th one 10 years back. What is the population of Japan? Just search what is the population of Japan and what is the population of India. $12.4 crore as of 2024. What is the India's population? 145 crore, 146 crore. Okay. But the per capita income of Japan is too high compared to the India. Okay, whatever the income of each person, if you take average, the per capita income of Japan is 10 times more, 11 times more than the India's individual's average income. Okay. Have you written only 5? Just only 5 are important. Don't write the other one. Okay. Anyway, I have sent the PDF. You can go through that. But you should compare the GDP of USA, China, India, Japan. Okay. Why? Because now Japan and Hindi GDP. But Japan government tells that just calculate only in the form of per capita income. Because your population is 145 crore and our population is just 12 crore, 12.5 crore. That is what they are blaming. That having the GDP in terms of rupee is not called as development. The per capita income, that is more important. That is what the Japan government has blamed at the national level. Okay. Next is national stock exchanges in India. Okay. That is at global level. This is at global level and this one is at the India's level. The first one is BSE. Just concentrate here. First one is BSE. Second is NSE. There are 7 more. Okay. These are very important one. First one is BSE, that is established in 1875 during British era itself. It was been established in India. Asia's oldest stock exchange is BSE. Next comes the National Stock Exchange. It is in 1992 established and it is the largest trading volume. What is largest trading volume? What is meant by that? The trading, the buying and selling of stocks is huge. Okay. The number of stocks, the volume of stocks means the number of stocks buying and selling, the investment, the trading is huge in NSE compared to the BSE. Understood? Next comes the Metropolitan Stock Exchange in India, that is recognized by SEBI. Then comes the other one. Okay, the Kolkata Stock Exchange is there. The regional stock exchanges are there. Okay. Let me dictate those also. Okay. But those are not much important. Only BSE NSE is very much important for your exams perspective. Okay. There are 7 national level stock exchanges operating in India. First one is BSE, next is NSE, next Kolkata Stock Exchange, and then Metropolitan Stock Exchanges, then Multi Commodity Exchange of India Limited, the National Commodity and Derivatives Exchanges. Those are not much important, only these are important. Okay. Is there any doubt in this? Next comes the commodity trading in India. Okay. Commodity trading in India. What is meant by commodity trading? Similar to the stocks trading, the people can also do the trading through the means of commodity only. Commodity will be in the form of metals, means the gold, the silver, the aluminum, the steel, and also oil, petroleum products, and also natural gas. Okay, that kind of commodity trading can also takes place. Okay, this is called as commodity trading in India. It is similar to the stock market itself. See, the raw materials like gold, silver, crude oil, wheat, these kinds of trading takes place in apps also, the same like stocks. There is a commodity related apps. Okay, if you want to invest, if you don't want to invest in a stock, you can also invest your money in commodity trading also. You can invest money in gold, silver, crude oil, wheat. Okay, think that if you want to invest in a wheat, okay, wheat is a agriculture related crop. If you want to invest some money in a wheat, think that the wheat price is just 1,000 rupees per quintal. You know, you will just purchase for 1 lakh rupee, the wheat will be in the form of paper format only. Okay, commodity trading. Okay, then in future it might become 2,000 rupees per quintal. Then you will be having how much of the profit? 1,000 rupees as a profit now. You have purchased at 1,000 rupees per quintal of wheat in a commodity trading. Once the price rises, during that time you can sell that wheat. I mean, not in the form of physical wheat here. It will be in the form of paper. That commodity trading will be done in the form of paper. That is just an investment for these raw materials. Understood? Once the price of the wheat rises, during that time you can sell at whatever the price it is having at that moment. Understood? Is there any doubt? Silver, gold, crude oil, wheat, these are the different types of commodity exchanges. Okay. Name multi commodity exchange. Okay, just write down. I will dictate. By March 2024, just write down. By March 2024, a total of by March 2024, the total of 113 commodities. Commodities means items. 113 commodities were notified by the SEBI for trading at the commodity exchanges, full stop. What is commodity trading? Trading of commodities like raw materials. Which are the raw materials? Gold, silver, crude oil, wheat, okay, and also the steel. There are 113 items. That is what you have written there. Okay, that is recognized by SEBI. SEBI has recognized 113 commodities. In that commodities, you can do the trading. Okay, it is same like a stock market itself. These are the companies. Okay, these are the companies of commodities. Multi-commodity exchange is there, national commodity and derivative exchange is there, Indian commodity exchange. FMC means Forward Markets Commission. Okay, Forward Markets Commission, that was been merged with SEBI. Forward Markets Commission. This Forward Market Commission used to regulate this commodity trading till 2015. In 2015, it was been merged with the SEBI. Now SEBI is in charge of the commodity trading. Just write it in your keywords. Okay. The same like a stock market, there will be fluctuations for these also. You can see the live prices of these gold, silver, raw material, crude oil, everything. Okay. It will not. See, this is at global level. Okay. See, the gold, silver, crude oil, wheat, these are not determined by the government of India, whatever the prices are there. At the global level, the prices will be fixed for gold, for silver and everything. Based on that, prices will vary in India. Okay, if the price of gold increases at the global level, automatically government of India should also increase the price, because we are importing the gold from other countries. Understood? Along with the gold price, whatever they have imported, they will put the taxes for that and they will sell for the customers. Understood? If the market, if at the global level, think it is 1 lakh rupees, they will just leave with the taxes for the gold about 3%, then they will sell in India. Understood? Gold will not come under GST here. Gold is having a separate tax for that. Okay. Most of the Indian people are condemning that gold prices is too high. No, government of India didn't make the prices high. At the global level only, the gold prices have been increased. If you go for the Dubai, the prices is just 5 to 10,000 rupees less for 10 grams of gold when you compare with the Indian rupees. Understood? Then comes the important financial terms. Have you seen the gold smuggling? In customs officer will be just seizing all that gold in airport. Have you seen that those kind of incidents? Have you heard? Okay. Why they do is because in olden days, before like 10 years back and 15 years back, gold price was too less in Dubai. Okay. Right now, since from 3 to 4 years, that is the difference of Indian gold, whatever they sell here and at the global level, is not too much of difference is there. Okay. But why they do a lot of gold smuggling during like a few years back is because gold price was less and they used to bring that gold in the form of biscuit, either in bags or either in they used to get operated and they used to put in a stomach also. That kind of people were there, the smugglers were there. Okay, then it got used to detect through the x-rays and everything, that kind of machines. And then drugs also, it was used to be smuggled like that, and gold also used to be get smuggled like that. Okay, one of the movie heroine, yeah, she have got she was fitted into that case as well. Okay, see, that is what the black money they will convert into a white money. Okay, that is what. Okay, they have invested too much of money in Dubai, and they're just selling all whatever the black money there, and they are bringing back that kind of smuggled goods, and they will sell here in the jewelry shop. That is what it was happening. Okay, and if you go for the Dubai, and if you want to purchase the gold for woman, it is around about 25 grams of, sorry, yeah, 25 till 25 grams of gold she can purchase, and she can bring back to India without customs duty. But for men it is just 10 grams of gold they can bring from Dubai. Understood? Only 10 grams of gold is just uh, permitted in India if you go for Dubai and if you want to bring that. It is not like 1 kg or 50 grams of gold. Okay, for men it is just 10 grams. For women it is less than 25 grams. Okay, if you bring more gold, you should pay the taxes, the custom duty, along with what is the source of income from where you have brought this much of gold. You should show a source of income also. Understood? If you want to bring more number of the more quantity of gold. The next is different financial terms. First one is par, next one is premium. Let us see what is par value and premium value. Think this is a share. Okay, this share is having the value of 10 rupees. This is a nominal value. Nominal means original value. Okay, nominal value or face value. Nominal value or face value of that share is 10 rupees. Okay, if that original share was 10 rupees, and think that in a market I am selling it at 120 rupees. Okay, there are people who will purchase at nominal value, and once the price increases they will sell in a secondary market also the same way. Okay, and it is at 120 rupees. Now from 10 rupee to 120 rupee, what is the difference between this? It is 110. This is called as premium. Whatever the profit is there, that is called as premium. Understood? See, the face value of a share or a bond in a printed certificate. In a printed certificate, it is just 10 rupees. That is called as par value. And when the share trades above its par value, whatever the profit they get, that is called as premium. This kind of definition was asked many times in your previous year questions. Par value, premium values. Par value means original value, that is face value of the bond. Just write it down. Okay, the next is discount. So what is discount? When share trades below par value. Okay, for whom the discount is offering here? For the clients, for the customers. Okay, think that the par value, original value is 10 rupees and the market value, if they are selling at 7 rupees, then what is the discount for the people? It is 3 rupees. Okay, next is bull market and bear market. Okay, as the bull animal will run faster than the bear, that is why they have kept this kind of names, bear and bull. Okay, what is bull? Market with rising prices and investor optimism. Okay, let me just give an example for you. Concentrate here. Think that one of the client or one of the customer have purchased the share. Okay, he has brought 100 shares. He has brought 100 shares at 1000 rupees. Now, what is the cost of one share? 10 rupees. Okay. And after a few days, the price of the share starts to increase. Okay. Starts to increase till 50 rupees per share. For one share, start to increase till 50 rupees. Now, again, he will take a risk and he will continue to increase this price of the share. He will wait again to increase the share. Now it might happen to 60 rupees. That is called as bearish market. Sorry, bullish market. Means he is taking a risk. Okay, and see, think that here the original share value is 10 rupees. Okay, and at the extent of 50 rupees, it is a good amount for him. But still he thinks that let me wait for again for a few days, it might increase the share. It might increase the price of the share. Okay, this is called as bullish market. Means the price of the share will increase. That is called as bullish market. Here the risk is too much and profit is also too much. Understood? And at this moment, he will get to understand that now this is the time not to wait and it might decrease the price. Okay. When it is about to decrease the price, he will sell his shares. He will not take the risk at that peak time. Okay. He will just sell his shares at 60 rupees. Understood? That is called as bullish market or yes, bull market. For 100 shares, it will be 600 rupees. Okay. Finish? Next, what is bearish market? What is bear market? Bearish. See, bullish market means high profit, high risk, high profit. Bullish market means high risk, high profit. Bearish market means less risk, less profit. There is a profit, but it is just less. Okay. Let me give one example. Again, think if it is 10 rupees per share and he has brought round about 100 shares at 1000 rupees. Now, this for one share, it might increase for 20 rupees. Okay. Again, he will think that this might just drop the prices. He might speculate the prices will fall and he will just sell it at 20 rupees itself. Then it is called as bearish market. Why? Because this is not having much profit here. He will speculate that the price will slow down, the price will be less in future. That is why he will not take much risk here. He will not wait till the price falls. That is why with the less profit, he will just sell that. Okay, and this is called as bearish market. Here there is also a profit. This is not a loss, but this is a less profit. Okay, here this is a less profit. In bull market it is more profit. Okay, in bearish market, okay, just see here, a person who speculates share prices to fall in future, so sells his shares and earns profit in little. That is called as bearish market, and that person name is called bear. That's it. Harshad Mehta was called as Big Bull. Okay, Harshad Mehta was called as Big Bull. Why? Because he used to make scarcity of shares in the market. Why? Because he used to purchase lot of shares from one company, and obviously automatically the price of the shares was too much during that time. The people got trusted. Where, see here, if the Harshad Mehta used to go in that road and if he drinks coffee in one of the in one of the tea stall, that in that time also, if he tells that in this company the prices will shoot up, most of the people used to buy that shares from that company itself. It was like that. He was speculation. Whatever he does is speculation. It was 100% correct only. Why? Because he is the one who will change the market, who used to rule the market. He is the one who used to buy the shares from the company in huge number. That's why people used to think that if it is 10 rupees, it would have become 200 also. And there were times where in newspaper, the Harshad Mehta's, the advertisements would have come that in this company, Harshad Mehta have already invested in this company. He is buying the share, and now the people would have brought lot of shares where the Harshad Mehta was invested. Okay, that kind of era was during 1990s time. Thousands of crore rupees he was earning during that time. After that incident, the SEBI had made strict rules and regulations regarding the stock market. Okay, who's the investor? If he is an investor, what is the source of income? Whether it's a black money or white money, and what kind of companies are selling the shares? Okay, then the company got listed under SEBI in order to sell and buy the shares. Okay, but all the kinds of rules and regulations came after 1992. The scam was took place in 1992. After that, SEBI has become autonomous body. Understood? Okay. Next comes the scrip and also sweet shares. Okay. Scrip means it is a certificate or a document representing ownership of shares. Okay. or else you can write the other definition of the scrip. Okay, just write the other definition for the scrip. A share given to the a share given to the a share given to the existing customers. A share given to the existing customers or existing shareholders without any charge, without any charges. This is also called as bonus share. Scrip is also called as bonus share. Okay. Scrip is also called as bonus share. Just concentrate here. There are some of the existing shareholders. Okay, there are some of the existing shareholders in a company. For them, the employer will give some of the extra shares, that is called as scrip. Okay. For the existing shareholders. Okay, it might be a public, it might be okay, any kinds of clients, whatever he is having. Okay, in the name of his company, whoever have purchased the shares, they are called as shareholders. For them, he will give some of the extra shares, that is called as scrip. For the existing shareholders, the employer or else that company will give the shares for the existing shareholders extra. Okay, it might be 10 in numbers, it might be hundreds of shares. Okay, it's like a bonus share. That is what they have written. Then what is sweet equity shares? Okay, this is given only for the employees. Okay, the employer will give for the employees, but this is for the existing shareholders, but this one is for the employees who is working in that company. It is also kind of a bonus only, incentives kind. Okay, have you heard in IT also they are giving the shares, whichever the companies have listed under SEBI, they will not give the bonus in terms of the hike or something. They will just give the shares, okay, for those employees. Okay, that is what called as sweet share. Okay, a share given to the employees of the company without any charge. A share given to the employees just write down, a share given to the employees of the company. A share given to the employees of the company without any charge. Without any charge. A share given to the employees of the company without any charge. Have you written? Once the price of that share increases, automatically the employees will also get the profit. Think that if one share price is 100 rupees, after a few years that share would have become 1000 rupees also for one share. Okay, this kind they will give the types of shares for the employees based on their designation. For the freshers, if they have joined, they might give only 10 shares. For the manager, they might give 100 shares. Okay, it is that kind. Next comes the FDI and FPI, as I told you yesterday. Okay? That is foreign financial investment. FII also, foreign institutional investment. Okay. Next comes the credit default swap. Okay. Okay. CDS. Okay. It is an insurance for the companies. Okay. It is an insurance for the companies. Let us see here. Example, if the investor buys CDS from a bank on corporate bonds, okay, if issuer defaults, the bank pays investor. Okay. The company will take an insurance. If the company is under the loss, if he has taken CDS, that is credit default swap, then on behalf of the company, who will pay? Bank will pay. This is just an insurance for the companies. Okay. And misuse was when took place in 2008 also during financial crisis. Okay, it was introduced in 2011. There was a financial crisis in 2008 at the global level. Okay. How the people will be having the insurance like life insurance, LIC and GIC. The same way for the companies also we are having CDS. Okay. They should get registered and they should take the premium also for CDS. If the company goes into the loss, at least for the employees salary and everything, whatever the property they have pledged, everything, whatever if the company has took a loan from another bank, if it is goes into loss, whatever the CDS they have taken, that insurance company will pay at least on behalf of the company. Is it a good idea or not? Credit default swap. Yeah, because think if there are many number of startup companies, if they don't get successful, at least whatever they are into the losses, that will be paid by whom? By the CDS. Okay. See, in order to protect the businessman, entrepreneur, and also the startup, this was been introduced in India in 2011. If the company don't have this kind of insurance, none of the entrepreneur and also the businessmen will come forward in order to invest the money in any of the company or factory. Okay, that is why they have brought this one. Next is corporate bonds. Just concentrate here. If any of the company wanted to raise the funds, wanted to raise an investment, these companies can either sell their shares or else corporate bonds or else debentures. Okay, if one of the company, okay, see, the company is having, now if the company wanted investment, okay, if the company wants investment, either this company can get listed under SEBI, okay, in the listed companies, and now it is ready to sell and buy the shares of that company. Okay, through selling and buying of shares, the company will get investment, or else through selling the corporate bonds in the name of that company. Corporate bonds under the name of that company, they can just for long-term investment purpose. For long-term investment purpose, they will sell the corporate bonds under the name of that company. Okay, for whom they will sell? For the public. Okay, then they will get the investment. The next one is a debenture. This is also a paper instrument. Okay, debentures. The corporate bond is also paper instrument. This is also a paper instrument. This is for long-term investment they will use. Okay, and this is for short-term investment they will use this debentures. Now this company will sell the corporate bond for the public, and there also you will be having, you have already seen bond price. I have already explained in the previous class. Bond price is there, okay, annual coupon is there, and also yield rate is there. What is bond price? See, think it is 1,000 rupees for that bond, okay, and 20 rupees per annually, 20 rupees they will earn this much of coupon. Then yield rate, what is the yield rate now? 20 by 1,000 into 100. How much? It is 2%. 2% of interest rate the people will earn, whoever have purchased this corporate bond. Okay. Now think that, just concentrate here. If that bond price is 1,000 rupees, if that corporate bond price is 1,000 rupees, annually if they earn 20 rupees, then what is for 1 year? What is the interest rate? They will just get 2% interest rate. If they want to raise the more funds, they will just decrease this price. Okay, they will decrease it to, think it is 900 rupees. Okay, think if they want huge investment at short period of time, they will decrease this value to 900 and they will give the same annual rate now. Now what is the yield price? It is 20 divided by 900 into 100. So what is the amount now? Just calculate in your mobile phone. Calculate in your phone. 20 divided by 9. 2.1 2.15 or 2.2. It might be 2.2 maybe. Yes. Then which is good for customers? This one, 2.22. Why? Because they saved how much rupees? 100 rupees they have saved. Okay. If they want huge investment, short period of time, what they will do? They will decrease the bond price value. If they decrease the bond price value, yields will be high. Okay. This is inversely proportional, as I told you in the previous classes. Okay. If the bond prices goes up, yield will be less. If the bond, understood, bond prices, every time the bond prices should be less in order to increase the yield rate, the profit rate. Okay. Here they have got only 2% of interest rate for 1,000 rupee. Here only for 900 rupee, how much they have saved? How much they have getting the interest rate? 2.2%. Understood? Okay. It is a debt instrument. Debt instrument means loan instrument. In order to just get the loan, it is a loan instrument issued by companies to raise the funds. And they are having these types of bonds: secured bond, unsecured bond, convertible bond. Okay, optionally fully convertible debenture, whatever you have studied, that all. And also it is regulated by the SEBI. Next, which of the following regulates stock and commodity markets in India? Stock market and commodity market is regulated by whom? SEBI. Next, which of the following is true? Which one is true? NSE is India's oldest stock exchange? No. Next one, BSE is Asia's first stock exchange? Correct. And SEBI regulates both stock and commodity market? Yes. 2 and 3 is the correct one. Okay. Next, sweet equity shares can be issued for recognizing employees' contribution. Okay. The employer will give the shares for the employees for their contribution, means for their performance. Okay. If the employee's performance is too good, either they can give a hike in their salary or they might give in terms of stocks, I mean shareholding. Okay. Is there any doubt in that? Next, a bull market indicates what? Continuous rise in the market price. Bull means it will increase. Bear means, yeah, here, just let me explain you again. See, there is a concept of bull and bear. Okay. Bull will either the bull will run faster than bear or bear will run faster than bull. Guli, okay, ಅಥವಾ ಕರಡಿ ಯಾವುದು ಸ್ಪೀಡ್ ಆಗಿ ಓಡ್ತದೆ? Gudi, okay, bull. Bull will run faster. That is why they have kept this kind of names here. Okay. Here, bull means sudden increase of the share price of the share. Increase in the price of the share very easily and very fastly, very swiftly. That is called as bullish market. Okay. If the person have purchased the share at 10 rupees, think if his price goes 100 rupees, then it is called as bullish market. He is called as bull. Okay. Why? Because he has took more profit here. Here, bearish market means it is the same 10 rupees. It is drastically, it is increasing. Means too slowly, it is increasing. Okay. And it is the time where the prices can fall. Okay. It might be just 20 rupees only. Okay. He might just sell it at 20 rupees. Here, profit is less, risk is also less. That is bearish market. Means the profit is huge in bull. Okay, bull market. Okay, this is the end of this stock market, security market. Okay, just take a break. We will continue with the new chapter called tax structure in India. ಯಾರು ಆಫ್ ಮಾಡಿದ್ರು? ಸರ್ ಆಫ್ ಮಾಡ್ತಾರೆ. ಓಕೆ. Yes, yes. No, there is no specific syllabus. Yes. There is no specific syllabus for the IB. They have just mentioned only the subjects names. Okay. You should refer based on the previous year questions. The topics will be taught here. Okay. For each subject, the topics based on the previous year questions and also along with the UPSC topics, whatever we have, we are just using that based on that only. Especially 90% it is based on the previous year questions. From that only we are teaching the specific topics here. It is not totally we are teaching the UPSC here. But based on PYQ only we are teaching here. Okay. Right now, polity have been covered up. Okay. Economy is going on. I'll just send you the recorded classes of economy also and also polity also. But the polity, this is a cycle. Okay, running cycle where the students will be again, they will be getting the admissions, and again for other students will be again teaching the polity, economy. It is like a cycle. It is like a process for IB. And then after that, there will be numerical aptitude and logical reasoning aptitude will be handled by the faculty in the next week, okay, upcoming week. Okay. And it covers around about 40 marks. 20 marks for numerical aptitude. For logical reasoning aptitude, it is 20 marks. Okay, both will be covered. Then there will be current affairs classes on weekends. Okay, we will cover up around about 1 year affairs. Okay, then lastly, the English grammar will be covered up. Is there any doubts?
Again, the test series, it will cover what we
It will be based on PYQ along with the other types of questions that we will teach here. Only for tier 1 we are teaching right now. Okay. The previous year questions for every topics, for every chapter, we will be teaching the previous year questions also. Whatever the previous year questions that has come from inflation or else security market or for banking, okay, these kinds of whatever the sir has also taught the polity the same way as it is, I think. Okay. Same way we are teaching based on the PYQs along with the different types of expected questions that might be asked. Okay. The next is tax structure in India. One of the important topic for your economy. This, what is tax? Which is imposed only on commodities.
Any other products. Except oxygen.
What?
Except oxygen.
See, for goods and services, there will be taxes also. Okay, that is called as GST, as you know. Okay, the tax, it is a collection of a fees, okay, from the public in order to develop the economy of each country. Okay, every country levy the taxes in order to develop their own country. Okay, that is why they will collect the taxes. Without the taxes, can we develop the nation? No, it is not possible. That is why they will collect the definition. Sorry, they will collect the types of taxes here. There are two types of taxes. One is direct and indirect taxes. Okay, what is direct tax? Direct tax means
Tax which imposed for the
tax which is directly imposed on customers, individuals, okay, or organizations also. Okay. Levy directly on individuals and organization. Organization means companies, the factories. That is called as corporate taxes, whatever we have studied that. Okay. For individuals, it is income tax. For organization, it might be corporate taxes. Okay. Next comes the indirect taxes. What is this definition?
the tax is paid by the levied on one person and paid by other.
Okay. See here. The best example is GST. Okay. It is levied for, this tax is levied for goods and also for the services. That is called as goods tax and service tax. Okay. Goods tax and service tax. Here see, think there is a manufacturer. There is a manufacturer. He has established one factory. Okay. A biscuit factory. And after producing the biscuit, this manufacturer will sell for whom? Wholesalers. Okay. There is a biscuit factory. This manufacturer will sell that biscuit packs in huge quantity for the wholesalers at different places. Okay. And these wholesalers, there are more in number. And what these wholesalers will do? Again, they will distribute for retailers in their locality. Okay. The retailers means the shop, whatever the shop you are seeing in the market. And these retailers will sell it for whom? Customers. They will sell for the customers. Okay. Now, this GST should be paid by the customers only. But customers will not pay the GST directly for the IT, income tax. Sorry. Customers, yes, customers will not pay the GST. Okay. Customers not pay the GST, okay, for the GST council. What they will do? This tax, GST tax, the goods, if they, this biscuit comes under which one? Is it a service or goods? Goods. This goods tax will be collected by whom? Retailer. Now, it is the duty of the retailer to pay this GST for the GST. Understood? In every pack, for every goods, you will be seeing inclusive of GST. Okay. That GST will be collected from the customer, but it is directly paid on behalf of the customer. Directly it is paid by whom? Intermediary. Intermediary means retailer itself. Understood? Retailer will pay the GST on behalf of the customer. Have you ever paid GST for the government directly? No. For whom you will pay? It is the inclusion of GST for that pack, biscuit pack. You are just paying the MRP for that, the total price for that. It is the duty of the retailers to pay the GST for the government. Understood? And that is why it is called as indirect tax. Why? Because You are not paying directly for the government of India. You are paying indirectly for the government of India. Through the retailers, you are paying that. That is why it is called as indirect tax. But these taxes, like income tax, corporate tax, that is directly should be paid by filing the IT. Understood? That is why it is called as direct tax. See, this is the definition of the direct tax. As I told you, taxes paid directly by the individual or a organization to whom it is imposed. You should know direct tax definition and its types. Okay. Just concentrate here. There are main types of direct taxes. One is income tax. Next is corporate tax. Then comes the MAT. Also dividend distribution tax, capital gains tax, security transaction tax, commodity transaction tax, angel tax. These are the different types of direct taxes. Understood? You should know the definition and you should know what is the percentage of taxes also. Understood? Now, let us see one by one. Every year during budget, the finance minister will announce and revise the tax slab. Okay. Currently at 2024-2025, sorry, this is 2024-2025 financial. Let us see 2025 and 2026. Okay. But this is old years, previous years income tax. Sorry, income tax. Okay. That is, if your income, just concentrate here. It is very much important to understand regarding income tax. Okay. Income tax should be paid either by the person who is taking the salary, that is employee. If an employee is getting the salary, you should also pay the income tax, IT. And also if the person is a businessman, you should also pay the income tax. Okay. See here, for employee, it is the IT tax will be levied. This income tax will be levied for his salary. Understood? If his salary is 5 lakh LPA, okay, he will come under which one? This slab. He should pay 5% of his tax for his income. Understood? It is not that after the expenditure, after paying the rent, electricity bill, after paying the expenditure, whatever he gets a profit, for that he is not paying income tax. Try to understand. Whatever the salary he gets, for that he should pay 5%. After that only he can do the expenditure in the leftover amount. Understood? Okay. Think that if he is having 5 LPA, okay, 5 lakh per annum, and after expenses in that year, if he saves 2 lakh, for this it will not be levied. For here, whatever he is getting the salary, for that the income tax will be levied. Understood? Most of the students will get the confusion. It is for this. If the employee is getting 20 lakh, then what is the slab? It is 30% he should pay. Understood? After paying the 30%, whatever the expenses, he can do the expenses. Understood? Is there any doubt in this? There are different types of slabs. Okay. 0 to 3, it is nil. Okay. Let us see in detail. Just put the heading income tax for financial year 2025-2026. 2025-2026. What is financial year? What is FY? Just concentrate. What is FY? It is the starting will be from April 1st, 2025 to next March 31st, 2026. During this time, whatever the employee generates the income through his salary, that will be under the slabs. Okay, let us see that. Okay. financial year 2025, 2026. Just put this heading. Financial year 2025, 2026. Don't write this one. Financial year 2025, 2026. Just write down that date and everything. So you'll not getting any confusion. Let us see the new tax regime of 2025, 2026. Yeah, let us see this one. Because in every website there it is same itself, because it is announced by finance minister. Okay, let us see. Every year the finance minister will announce the tax slab, and he or she is the one who will announce the budget also. In that budget moment only the tax slab will be announced.
After 12th,
Up to? Yes, let us see, wait. Financial year. Let us see the income tax department website itself. Let us see here itself. Okay, see here. This is the new tax slab. Okay, whatever you said, it is here. Let me explain that also in detail. That standard deduction after 12 lakh. Okay, this is the new tax slab of financial year 2025-2026. Okay, this will be assisted, and it is called as assessment year of 2026-2025. I have already just cleared the doubts regarding FY and AY in your first chapter itself. What is FY? This is the present year, that whatever the slab income tax slab is there, that will be announced. And this, after this, in the next year, it will be getting assessed. Means it will be calculated how much income the government of India got through these one. Okay, that is called as 2026-2027. Up to 4 lakh it is nil. If your salary is still 4 lakh per annum, it is zero tax. Then it is, if it is 4 lakh 1 rupees to 8 lakh, it is 5%. 8 to 12 it is 10%. 12 to 16 lakh it is 15%. 16 to 20 lakh it is 20%. 20 to 24 it is 25%. About 24 lakh it is 30%. If your salary package is more than 24 lakh, it is 24%. Just write down these slabs. This is important. If you write and see in the next year for UPSC, you should update with 2026 and 2027. First, budget will be announced in the month of February. You will be writing the exam in the month of May itself, and September you will be writing your mains. That's why this data might not be useful. Understood? See, along with this, Nirmala Sitharaman have announced a tax rebate for the salaried people, salaried individuals. She has announced that individuals with taxable income up to 12 lakh will have zero tax liability. Means till 12 lakh, the salaried people are rebated from paying the taxes. Understood? Initially, the rebate was 60%, sorry, 60,000, and now it is increased. Sorry, due to an enhanced rebate of 60,000 rupees previously. This is the exact answer. 75,000 can be deducted from that. Okay, if the income is more than 12 lakh, only 75,000 rupees will be deducted. Understood? This is the new regime for the salaried individual. She has been announced. And if it goes more than 12 lakh, think if it is 15 lakh for a salaried person, till 12 lakh it is zero. And next 3 lakh rupees from 13, 14, 15, that 3 lakh rupees, that comes under which slab? That is nil again. Okay. And if it is 16,000, here it comes. You should pay 5% now. Okay. But the 75,000 rupees he should pay as a tax itself till 12 lakh rupee. For 12 lakh salary, he should pay at least minimum of 75. Is there any doubt? Okay. For salaried employee, income tax should be paid or levied should be paid before the expenditure. Just write down rent, electricity, okay, and groceries. Okay. For businessmen, the income tax should be paid after the expenditure. After the expenditure. This is very important. What kind of expenses we'll be having? Office expenses. Okay. Office expenses. Write down in the bracket. Office expenses will be there for him, and office rent will be there. He should pay, and equipments, salary to staff. Just write down in a bracket. Salary, equipments, salary, equipments, travel for business, all can be deducted. All can be deducted. Full stop. Income tax should be paid after the expenditure. Office expenses, salary, equipments, rent. Just write down the rent also. Have you got my point regarding this? The salaried employee should pay the income tax before the expenses. Means whatever based on the salary, he has to pay the taxes. This is the one. Okay. For businessmen, if you how to calculate the income tax for businessmen? This income tax will be calculated after these kinds of expenses like office expenses, electricity, rent, and also the employee salary, equipments, and traveling for the business. That all after the deduction of all those things, whatever the profit he is having, for that, whatever the income he generates, for that income he should pay the taxes. Understood? Yes.
So if a businessman running a business, he doesn't have any profit and gain, and he will rent a house and so even though there is collective tax for that.
Yes, that is called as MAT, minimum alternate tax. That I will just discuss regarding that. Okay. Minimum he should pay the tax. That is 15%. Okay. Is there any doubt in this? Okay. Next comes the corporate tax. Corporate tax. Just put the heading corporate tax. It is a tax that is levied on companies. Okay, corporate. It is a tax levied on companies or a corporate sectors in India. Okay, whatever the profit they earn, for that they should pay the taxes. Okay, if the profit is 100 crore, then if it is a domestic company, means Indian company, they should pay 22% base rate along with the surcharge and cess. Okay, these are the additional taxes. Okay. Yes, for domestic company and for the foreign companies also. Okay, let me give one example for you. There is an Indian company. There is a foreign company. That is already established in India itself. There are many number of Indian companies and also some of the foreign companies are established in India. Okay. Whatever the profits they make in that financial year, they should pay the corporate taxes for the government of India. Okay. But for the domestic company, it is 22%. The base rate is 22%. And but if it is a new manufacturing company, means recently if it was been established, for them they have given the only 15% of the taxes they can be paid. Why they have just reduced that taxes for the new manufacturing companies? To encourage them, to support them. Okay.
22 plus 15.
No, it is for existing domestic companies. It is for existing domestic companies. It is for new domestic companies. Understood? Okay, then they have given the criteria as well. Like if it is the turnover for existing company, if the turnover is more than 400 crore, okay, the tax, the base tax was cut from 30% to 22%. If it is more than 400 crore turnover is there, for them, the corporate tax is 22%. Initially, it was 30% more. They have also reduced from 30% to 22%. It is also good for them. Understood? Then for existing company, it is 15%. Means it is from October 1, 2019. On or after October 1, 2019, whoever have established the new companies in India, for them it is 15%. Plus, they should also pay cess and surcharge. Okay, these are the additional charges, additional taxes. I will just explain the definition of both. Okay, plus cess and surcharge. The base rate is 22 plus including cess and surcharge, it is 25.17. 25.17%. The total. Concentrate here. The base rate is 22%. If they should also include again cess surcharge, these are the additional taxes. Okay. After calculating these additional taxes, now it is from 22 to it is 25.15. Again, they should pay this 15%. These new manufacturers, for them, the base rate is 15%. Again, they should also pay cess and surcharge. Inclusion of cess and surcharge, for them, it is 17.17. 17.17. Sorry, 17.16%. Inclusion of cess and surcharge. That much they should pay for their profit. It is for existing domestic manufacturers and it is for new domestic manufacturers.
So
This is the corporate rate.
surcharge will be 2.1.
Yes, 2.16. 2.16 or 2.17. Okay.
Here it is 3.1. 22 plus 3.
See, this, for this, they will calculate. Okay. It is not fixed. It is for the base rate they will calculate. 4 plus 10%. Cess will be 4%, surcharge will be 10%, I think. Okay. For base rate, they will calculate cess and surcharge. It is a tax on tax. See, this is only one tax. For this, again, they are charging cess and surcharge. Baddi chakra baddi hengo, the same way. Tax that is additional tax. Okay. Yeah, both are additional tax, cess and surcharge. It is tax on tax. You can just write down in the note that the additional taxes like cess and surcharge. It is tax on tax. See, this will benefit for small and medium scale companies. In order to encourage the small and medium scale companies, they have reduced from 25% to 15%. ಮುಂಚೆ ಇವ್ರಿಗೂ 25% ಇತ್ತು. It was reduced to only 15%. Okay, the total corporate tax the domestic company should pay is this much, inclusion of cess and surcharge. For new manufacturers, they should pay this much of corporate tax. Understood? Now for the foreign company, how much they should pay? 40%, 40. Okay, 40%. Is there any doubts here for corporate tax? Have you understood? Now, there is an assignment for you. Which is the country that is having lower income tax and also lower corporate tax? Which are the countries? Just write down, it is an assignment for you. Which are the countries that is having lower income tax and lower corporate tax? Which are the countries that is having lower income tax and lower corporate tax? See, why our Indians are going for the UAE? Okay. ಏನಕ್ಕೆ ಹೋಗ್ತಾ ಇದ್ದಾರೆ? Why our Indians are going for the UAE and they are establishing the companies there? Do you know that most of the Indians are going for the UAE and they are just establishing the company over there? Why? Because there is no income tax. There is no personal income tax. As you have, at least based on the slab, the highest is 30%, lowest is 0. But there is no rules of paying any income tax. There, our Indian citizens will save the money, income tax or not. Along with that, there is no capital gains tax, no wealth tax also. And the corporate tax is just 9%. But in India, how much? 22 plus cess and surcharge for existing domestic, and for new manufacturers it is 17%. See, that is why most of our Indians are going for the UAE and they are just investing money in the Dubai. Understood? They are establishing there. Why? Because it is just 9%, the corporate tax is. And there is no income tax at all for them. There is no capital gains tax. There is no wealth tax. In Qatar, okay, they have given these one. Okay, Kuwait, Bahrain, Monaco, Bermuda, Cayman Island, okay, Oman also. Okay. Wherever there is a income tax or corporate tax is low, most of the investors will go there and they will just establish the company over there. For foreign companies, it is 40% here to pay the corporate tax. It is huge burden for them. That is why they don't get attracted to invest the money in India by establishing the companies. Have you understood now? Why our FDI is too less is because If once they establish the company, they should pay around about 40% plus cess and surcharge. Okay. If you go to the Wikipedia regarding the tax slab, you will get to know which are the countries. Okay. And they have just listed down here. See here. In Afghanistan also it is less. It is 20%. The corporate tax is just 20%. Okay. Based on the alphabetical order, they have even taxes. Can just go through that. Is there any doubt? Next comes the MAT, that is minimum alternate tax. See, this is very important, very, very important. Put the star mark for that. Just write down only the MAT. Let me explain that in detail. See here. Since there was a too much of the corporate tax was levied for the companies started to just show 0% bookish profit. In order to save the tax, in order to exempt this tax, what these large companies, big companies have done, they were used to show in the balance sheet that we are not having much income, we are into the losses. Okay, that kind of the illegal ways they were using. In order to overcompensate that, they have brought this minimum alternate tax. Minimum they should pay 15% for their book profit. Understood? What is the corporate tax? Round about 25%, 27% they are having. Okay. In order to compensate that, at least they can pay around about 15% for their book profit. Okay. Either of them they can choose. Understood? Okay. Now, in order to prevent this corporate tax, they have brought this minimum alternate tax. Okay. Just write down the example for that. Okay, minimum alternate tax, it is 15%. Initially it was 18.5%. Okay. Now it is 15%. Just write down. It is a minimum amount of tax. It is a minimum amount of tax. It is a minimum amount of tax that a company has to pay. That a company has to pay. Comma. Even if its normal taxable income is, even if its normal taxable income is very low or zero. Yes, it is a minimum amount of tax that a company has to pay, comma, even if its normal taxable income is very low or zero due to the exemptions. Okay. Full stop. Next point. It is calculated on book profits. Book profits. Just write one example for that. Write down example. If the book profit is 100%, sorry, 100 crore. If the book profit is 100 crore, if the book profit is 100 crore, book profit is 100 crore, then this 100 crore taxable income will come under 10 crore only. Okay, just concentrate here. If the book profit is 100 crore as per the account, as per the balance sheet, whatever they have maintained, okay, then that will come under the slab called as 10 crore. Okay, the taxable income is just 10 crore. If they are having this much of profit, okay, this is the profit. If they are having 100 crore of profit, this 100 crore will come in the tax slab of 10 crore. Now they should pay the tax of 10. Yeah. Okay. But when they start to avoid this kind of corporate taxes, what is the corporate tax for them? What is corporate tax? It is 25%, 27. Okay, inclusion of cess and surcharge is 27.17. Okay, just write down 27.17. Means, concentrate here. If they are having the profit of 100 crore, how much they should pay? 27.17 crore they should pay if it is a corporate tax. In order to avoid this tax, they used to show zero tax. I mean zero profits. Okay, in order to save this money, most of the companies used to exempt the tax by just showing that we are into the loss or we are into less profit. Now they have brought tax called as MAT, minimum alternate tax. Now how much they should pay? 15%. Plus cess and surcharge also they should pay now. Okay. Now see here. If the book profit is 100 crore, now it is 15% plus cess and surcharge. What is the total? It might be 17%. Okay. Now what they should pay is either corporate tax or else minimum alternate tax. Okay. Is there any doubt here? Just write down this example. Sorry, now see here. I'm very sorry. Book profit is 100 crore. Okay. And if the income tax comes under this slab, now the corporate tax thing it is 27.17. It is for 10 crore, not for 100 crore. Okay. It is not for 10, it is just for 10 crore. Why this is? Because for the corporate companies, whatever the book profit will not be considered as a corporate tax now. Only this book profit will be considered only for the MAT. Okay. If they come under the tax income of 10 crore, they should pay this much. I mean, this much of percentage. For 10 crore, how much? 2.5. 2.7 crore they should pay now, or else they should pay how much for MAT? Under MAT, if the book profit is 100 crore, then how much they should pay? 17 crore. Now this 2.7 crore is a corporate tax and this is a MAT. Now it is levied. This MAT is levied. Why? Because this is a minimum alternate tax. This is not applied for them, and this can get rebated in the next year also. Why? Because they are avoiding the corporate tax. That is why they should. This is levied for them, and next year, if it is even less, and even in the book profit is less, then that can be rebated back. Okay. This is complicated. I don't want you to get that complications as per now, but think that the minimum alternate tax that should be paid. Okay. Even though it is higher also, they should pay. Why? Because they are avoiding the corporate tax. And in the next upcoming years, they can get rebated back again. Understood? Again, matlab 3 crore. Okay. Firstly, they should pay 17 crore. Next year, again, they can get rebate also for that. This is kind of a taxes. Okay. They should pay. One is minimum alternate tax, one is corporate tax. Okay. Just write down. First book profit is 100 crore. Next is income tax is 10 crore. This is corporate tax. See, why they should pay MAT taxes? Because in order to avoid the book profit, whatever they have showed the book profit, okay, they should not avoid this one. That is why they should pay at least a MAT. Okay. They can't avoid either the MAT or else corporate tax. Next, write down the cess and surcharge definition. Cess and surcharge definition. Have you heard this cess and surcharge? It is a tax. Cess. Okay, it is a tax levied over. It is a tax levied over and above the basic tax rate for specific purpose. Basic tax rate for specific purpose. Example, health and education. Example, health and education equal to 4%. Equal to 4%. If the tax is 100%, the cess will be 4%. What is the total? What is the total tax they should pay? It is 104 rupees. Okay, just write down. If the tax is 100 rupees, cess is 4%, then the total tax, the total is 104 rupees. Education. See here, this is cess tax. They are using it for specific purpose like health and education, for development of government hospitals, government schools. Okay. Next comes the surcharge. Just write down that. A surcharge is an extra tax on income tax. Extra tax on income tax. Usually for usually for higher income slabs, full stop. For individuals, earning above 50 lakh, surcharge is levied open the bracket, just write down 10 percentage, comma 15, comma 25 percentage, 10 percentage, comma 15 percentage, comma 25 percentage, comma 37 percentage, depending on their income level. 10, 15, 25, comma 37.
That means about 50 lakhs.
Yeah, if it is more than 50 lakh. This is not calculated for overall profit. This cess and surcharge are calculated for the taxes. If your income tax, if the slab comes under 30, see here. If it is more than 50 lakh, it is 30 percentage. Okay. If it is more lakh, see, think the in IT, okay, what is the income tax for more than 50 lakh? It is, if your income is more than 50 lakh, what is the tax, income tax? 30 percentage is for 50 lakh, how much you should pay? For 50 lakh, how much tax you should pay? Huh? 15 lakh. Okay. 15 lakh is a income tax now. For this 15 lakh, you should pay cess plus surcharge. Not for this overall amount again. Why? Because it is additional tax, tax on tax. For this again, you should pay. How much? For 15 lakh, you should pay 4 percentage cess.
So that 4% will be fixed for everything.
Yes, it is fixed for everything. But this is not fixed. Surcharge is not fixed. It is 10, 15, 20, 25, 37.
How it is classified?
How it is classified? If it is 50 lakh, it is 10 percentage. If it is 75, 1 crore, it is 20, 25. Based on higher again income rates, again it varies. If it is 10 crore, it is 37 percentage as you have written. Okay. See here, 15 lakh is 4 percentage. Just calculate. Just I will only calculate, wait. Okay. Cess for 15 lakh, it is 50.
3 lakh, 15 lakh. For 15 lakh.
For 15 lakh, it is 3 lakh. No, 60,000. For 15 lakh, it is 60.
60.
Yes, 60,000. Okay. 60,000. Okay. It is 60,000 plus surcharge. If the surcharge is between 50 lakh to 1 crore, it is 10 percentage. Okay. If your income is between 50 lakh to 1 crore, it is 10 percentage surcharge. Okay. Now calculate. For this one, what is 10 percentage? It is 1 lakh 50,000. Now calculate all this. 15 lakh
16 lakh
plus 60,000 plus 1 lakh 50,000. The total will be 17 lakh 10,000. This is what you should pay. Understood? The higher the income, you should pay additionally cess and surcharge. Don't think that I will just pay only income tax. No. Along with income tax, you will pay cess, surcharge, everything. Now, did you got my point? How they will calculate the tax?
Can you say the surcharge slabs? Like,
You want a surcharge slab also? Okay, wait. You're having that much of money? If it is up to 50 lakh, no surcharge rate. Okay, if it is up to 50 lakh, no surcharge rate. It is nil. Just put the two columns. Okay, if it is up to 50 lakh, nil. 50 lakh to 1 crore, next column. 50 lakh to 1 crore, it is 10 percentage. Next, third one, 1 crore to 2 crore, 1 crore to 2 crore, it is 15%. 1 crore to 2 crore, it is 15. Next, 2 crore to 5 crore, 2 crore to 5 crore, it is 25. 2 crore to 5 crore, it is 25%. Okay. Above 5 crore, 37%. Understood? Means if you are earning above 5 crore per year, now you should pay for 5 crore, you should pay IT of income tax of 30 percentage, and for that fixed cess along with 37 percentage of cess for this 30 percentage. Understood? How much? For 5 crore, if it is 30 percentage means 1.5 crore. Just check. For 5 crore, if the income tax you should pay is 1.5 crore. Okay. Is it 1.5? Yes, it might be. Yes, 1.5 crore. Okay. Concentrate here. If you have in the income of 5 crore every year, you should pay IT income tax of 1.5 crore. For this 30 percentage, I mean for this, sorry, for this, okay, for this it is 4 percentage. For this it is 4 percentage cess, and also along with this 37 percentage of surcharge, and this is for cess. Then you calculate, you will be understand. Now have you understood? Okay. This is tax on taxes. Is there any doubt here? Till now, no doubt. Okay. Next comes the DDT. That is dividend distribution tax. That was been abolished in 2020. Okay. Dividend distribution tax. Only the limited firms are having the right to sell the shares, not these ventures. Okay, those who are having the companies called LTD. At finally, have you seen the limited companies? Only that limited companies are having the right to get listed under SEBI. Once they get listed, they can sell the shares. Okay, for the shareholder, they will give the profit, that is called dividend. Understood? Every year they will get the profit. Once they get the profit for the shares, for the shareholders, they will give the dividend. The dividend is called as profit for every shares. Okay. Dividends now taxed in the hands of investors here. Let me just explain the meaning, definition for that. You can just write down. The dividend paid by the company, the dividend paid by the company to the shareholders, used to attract direct taxes in India. Used to attract direct taxes in India. That was called as DDT, dividend distribution tax. DDT. Okay. Full stop. It was abolished in 2020. It was abolished in 2020. The tax was 15% for DDT. Okay. If you earn 100 rupees for your share, in that 100 rupees, 15% you should pay as a tax. In order to avoid that, this government of India abolished this one, and now whatever the shares you are having, if you sell and if you get the profit, that will be included in your income tax only now. Understood? Income tax means not only the salary, whatever the rental income you get, and also whatever the businesses, from business you get the income, that all will be calculated. That is called as income tax. Okay, whatever the profits you get from the dividend also, that is now it is under the income tax only. Understood? Initially, the companies used to deduct the DDT and it was used to pay for Government of India. Whatever the shareholders used to get the profit, in that 15% was been cut off and it was used to pay for Government of India. Now, it was a huge burden for the companies as well, and none of the shareholders got attracted by paying the 15%. Then the Government of India abolished this DDT, and whatever the shareholders, they are getting the profit by selling the shares. Okay, now that profit will be considered under income tax only. Now you should just register that under income tax. If you don't include that in your income tax, that is called as again the black money. That you are avoiding the taxes. That comes under tax evasion also. Understood? Okay. Write down in the next point. Now the companies do not need to pay DDT anymore. DDT anymore. Full stop. Full stop. The shareholders will be paying the tax for the dividend in their personal income, and this dividend should be included in the personal income tax. the personal income tax. Next comes the capital gains tax. Very important. Capitals gains tax. Capital gains tax. What is capital gains tax? What is capital gains tax? This is a tax that is paid after selling your asset. Okay. Once the owner sells his asset, when he gains a profit, during that time he should pay the capital gains tax. Okay, just write down. It is a direct tax. It is a direct tax. Applies on sales of all assets if a profit has been made. If a profit has been made by the owner. By the owner. By the owner. Think there is a commercial plot. Think there is a commercial plot of 30:40. Okay. 30:40 plot is there. Okay. Now, this value at 2020, okay, at the year 2020, that value was 2 crore. At the market value is 2 crore. But in BDA, in the government, okay, that value is less. Do you know that? I think you people know. Government value is different, market value is different. Okay. The government value, okay, under government value, if it is only 50 lakh, okay, one of the person who is having the black money, he will tell for this owner that I will just purchase it at 50 lakh in a white money and rest of the market value at 1.5 crore I will give in a cash. This happens. This is a common everywhere. Do you know this or not? Okay. In registration will be made only for 50 lakh and rest 1.5 lakh will be given in cash only. Okay. This is what the illegal process they do. Okay. But at 2020, it was registered only in 50 lakh now. Okay. In 2025, okay, think this is the owner X have been sold this one to Y owner. X owner have sold it for 50 lakh and for the Y owner. Now this Y owner wanted to sell this plot again. He have purchased it at 2 crore at the market value and he wanted to sell it now. It is of 5 crore at market value. think that Z person, the Z owner will purchase that. Now the government value might be appreciated, okay, to 75 lakh. Okay, let me take 1 crore then. 1 crore. Okay. Government value is 1 crore now. Understood? Now, this Y owner, when he wants to sell this 30-40 site at 5 crore, he will not sell it at 5 crore now. If we sell it for 5 crore, then at registration time, how much he have paid? 50 lakh. This is legal. Okay. In government, it is only 50 lakh. If he registered this at 5 crore, then he should pay for 4.4 crore 50 lakh. This is a huge amount again. Understood? He may see, this is a market value. This is not recognized by the government. He has just put the registration only for 50 lakh now. Now, he will not register this site at 5 crore. He will register the site at 1 crore or 1 crore 10 lakh. That way. Okay. He will also again take the black money now. Okay. This is what it will happen. If he wanted totally a white money, then he should pay for this 4 crore and 50 lakh. For 4 crore 50 lakh, he should pay the capital gains tax. Understood? It is 20%. For 4 crore 50 lakh, he should pay 20% for that. How much is 20%? How much? The total amount for 4 lakh 50. For 4 crore 50, 85. Okay, that much of that much of tax he should pay. In order to avoid 85 crore as a tax, what he will do? He will pay only for 1 crore. Means what is the profit now? According to registration, 50 lakh, he was brought that and he is selling at 1 crore now. What is the profit? 50 according to the government. According to the government officials, it is just 50 crore. Sorry, 50 lakh. For 50 lakh, he will pay around about only 20%. Now how much? Only 10 lakh. Have you understood now? Here he would have paid 85 lakh. Here only 10 lakh. Which is possible, which is easier for him to pay. Only 10 lakh he wanted to pay now. Okay. The rest of the amount, that black money will be again, he will just bifurcate and he will invest in different forms. Understood? In order to avoid capital gains tax, they will take a registration at the government value itself. Understood? Those who are having black money, they will do this fund. Those who are not having black money, they will just put the registration value of government. They will just have the government registration value itself. Understood? See. Okay, let me. Okay. Now, the capital gains tax. See, if the short-term asset, if you wanted to sell within 36 months, that is called as short capital gains tax. Okay. Let me dictate. There are two types of capital gains tax. There are two types of capital gains tax. Two types of capital gains tax. First one. Short-term capital gains. Short-term capital gain. Put the hyphen for that. If the asset has been sold, within 36 months, means within 3 years, within 36 months of owning it, then it comes under normal income tax slab. normal income tax slab. Means whatever the tax regime is there, you have seen till 4 lakh it was 0%, 4 to 8 it was 5. Okay, that one, that the same for the short term capital gains tax, the same thing. If you have bought agriculture land or commercial plot or else any kinds of assets, if you sell within 36 months, this capital gains tax, the short term capital gains tax, that is applied the same like income tax. Understood? Whatever the income tax is there, the slab, that is similar for the short term capital gains tax. If you sell your property within 36 months, means within 3 years. But the stocks or the bonds, if you sold within 12 months, that is different one. Okay, just write down the next point. If the shares, mutual fund and zero coupon bond sold within 12 months, then the tax will be 15%. 15. Full stop. Just write down the second one, that is long term capital gains. Just put the heading long term capital gains. Long term capital gains. Put the colon. If the asset has been sold, after 36 months, of owning it, the tax will be 20%. Full stop. Next point. For shares, mutual fund and zero coupon bond, the tax will be 10%. Tax will be 10%. Bracket ali above 1 lakh of capital gains. Above 1 lakh of capital gains. Where? If the asset have been sold after 36 months of owning it, the tax will be 20%. Then for shares, mutual fund and zero coupon bond, it is 10%. Write down in the bracket, open the bracket and write down above 1 lakh of capital gains, bracket close. That is just what I have written, 10%. Okay. Let me explain zero coupon bond tomorrow. Okay. For zero coupon bond means, for government bond you used to get the annual coupon. Okay. For every year you will be getting 20 rupees, 60 rupees like that. Zero coupon bond means you will not get any kinds of rupees here. You will not get any kinds of profits. Okay. Based on annually. There will be face value. Okay. There will be a face value and also the lump sum value. Okay. Issue price. Okay. Let me just write down. Where is this? Okay. Okay. This is a zero coupon bond. Okay, concentrate here. The issue price, there is an issue price, there is an face value. Okay. This zero coupon bond might be of 60,000 rupees. Okay. They will issue at 60,000 rupees. But after certain years, after 3 years, this face value will be 1 lakh rupee. Once the maturity period gets over, after 3 years, if you submit, then they will give how much of amount? 1 lakh rupee. Understood? Annually, they are not paying you, but it is having a fixed value. That is a face value. Understood? But what is the government bond or corporate bond? They will pay you annually. Okay, the bond price is, think that this bond price is 60,000 rupee. Annually, there is a coupon, annual coupon. For every year, you used to get 6,000. Okay, 6,000. Then what is the yield rate now? If the bond price is 60,000, okay, and annually the coupon they used to give is 6,000, what is the yield rate now? Just write down 6,000 divided by 60,000 into 100, it is 10%. Understood? 10%. Every year they should give you, they used to give 6,000 rupees. Lastly, they will give you only this one, fixed amount, whatever you have paid. Okay, whatever the 60,000 you have paid, after 3 years, they will give only 60,000 rupees, but annually they are giving you 6,000. Okay, but here zero coupon bond base, they are not paying you annually. There is annual coupon here. There is issue price and face value. That's it. Understood? If I might tell you, just give me 500 rupees today. I'm having urgency. After 3 days, I will be paying 700 rupees. That is called as zero coupon bond. Understood? How much you have issued for me? Only 500 rupees. I'm offering you 700 rupees. That is called as zero coupon bond. Understood? Let me give the definition tomorrow for that. Okay, we'll wind up the class.